This episode of the Land Podcast is with Aaron Shew of Acres, and they just recently released a report of 37,000 land transactions across the heartland of America, tracking farmland trends and prices. You guys are going to want to hear this conversation. He talks about what that process looked like and what you guys can learn from it. You can head to the link in the description and download the report for yourself. Hope you guys enjoyed this conversation. Here we go. Aaron, welcome back to the Land Podcast. How's it going?
Yeah, doing great, Jake. Great to see you again, and thanks again for having us on the show.
Yeah, I'm really excited for what we're going to talk about here today. I read through it here a couple times, actually, and what we're talking about is the Heartland Report, of which Acres released, and you kind of tackle that head on. So before we get into all of that, though, just briefly reintroduce yourself for anyone that didn't catch the last episode where we talked about your mapping software.
Yeah, sure thing. As always, it's great to be on the Land Podcast. Always enjoy listening in and learn something every time. So hopefully this will be another great contribution to what you've produced. I'm Aaron Shew. I am the Director of Data Science at Acres. That's acres.com if you want to check us out online. And my background, so I was a professor. I was an agricultural economist as a professor here at University of Arkansas, and have a background in both GIS, or Geographical Information Systems, and Ag Econ. So I jumped over here to Acres about 2 years ago and started building out a data science team, and fell in love with it, left the university and joined full time. And so we provide all the data. Basically, what my team does is we pull lots of data, private sources, government sources, and we pipe that into the back end of our Acres app to allow users to have a really easy interface. Mm-hmm. So whether you're after soils data or elevation data or assessor information on landowners, my team's the one that sort of funnels all of that data into our system to help produce that easy interface for our users.
Yeah, easy for us to use, but I have to imagine that's not easy to manage, because that is so much information when you look across the entire country with courthouse sales data and everything else. That's got to be a lot.
It is a lot. It's a lot of data. The individual data sets are large, but beyond that, they're all very, very different in how they come to us. And so, yes, it has been honestly a really fun job, because I get to learn constantly. There's always something new problems to solve, which I really like. And I love ag. And so all the pieces of data that we're touching are related in some way to understanding land, farmland specifically. And so it's been really fun to just kind of be part of building this national picture of farmland and building an interface where everybody has that ability to go in and evaluate their farm or a farm that they're interested in, or for a broker that's working with a client on a sale or something like that. So certainly plenty of challenges, but also a lot of fun as we overcome those challenges and build what I believe is a really remarkable and complete software for land analytics.
Yeah, absolutely. And I think as a user, I don't take that for granted, because I have to imagine the amount of work and data you guys have to work with for me to, what state do I want to look in today and poke around and see what sales are going on and run comps and just learn different parts of the country. And that's what you can do with Acres. But as far as the Heartland Report, what provoked this, or what birthed this idea? Because it's comprehensive, but also digestible.
Yes. So the Heartland Report, we've spent years now building all of this data, and a core part of our product, as you well know, is our sales data. So you'll see some value, sort of land values reports out there, but often they're based on survey data, right? And it's not that those aren't useful. The goal here is certainly not to downplay any information. We're big believers in more data is better, and more reports are probably better. It gives us a more holistic picture of the farmland values landscape. But for us, we have this massive database of both courthouse sales and curated and contributed sales in our database. And so what was particularly interesting to us was just asking this question: what can we provide with this data and the power behind our database that really just doesn't exist and hasn't existed previously? And so that question, spurred me to dig in and my team to dig in, started looking at sales and how we might build a report. What would be different about it? Because we don't just want to build a replication of what other people have done. So one, we're different because we're using real sales, both from assessors and reported by brokers and participants in sales, which gives us a bit more of an edge in the market. Just have a lot more sales there to pull from. So it's a quantity and a quality thing, though. So we have a lot of sales. There's actually millions of sales in acres, but we focus in on that heartland or Corn Belt region. So there's 8 states we included in the report. Most reports don't cover the full Corn Belt, right? They're kind of, you'll find some really the strongest reports I've seen are in Iowa, which makes sense. There's a lot of really good sale data in Iowa. You'll find some in Illinois, and you'll find a few that kind of paint with a broad brush using survey data. But nobody has produced a really comprehensive cross-state comparison of farmland values over time like this, where you have a lot of transaction data, but we also pair that with soils data. Right. So we get this inherent productivity using productivity indices to understand not just the farmland value trends over time, but how that breaks down across productivity classes. So from my perspective, it's just a really novel and unique report because it includes those additional aspects of not just quantity of sales data, but also that data quality piece.
Yeah, that's huge. And it is interesting because I would agree that Iowa has excellent data that you can find online. Illinois does a pretty good job. There's an Illinois report that goes out every year that is great, and they segment the state similar to what you guys kind of did in some different areas. Because as you can imagine, it's not all great soil throughout an entire state. There's pockets, and you guys address that. But as far as when you were hedging this, what was the date range for this?
So we started about the time. So our sales data actually goes back to 2016. From us, that's when we started collecting from assessors' offices. But we wanted to start the report where we had the curated sales database, which was in 2020. So we started the analysis in Q1 of 2020, and we move all the way through Q2 of this year. So about 2.5 years of data included in the study.
Okay. And I guess diving right into this, before we do that, where can people find this? So in case they want to pull this up while they're listening along, they can also check it out. But where can they find this? And then we'll dive into some more things with the report.
Sure. Yeah, they can go straight to landvalues.acres.com, and it is listed right there at the top. You click on the link to the land values report, it'll come up. And if you want so that's where we put a lot of our content. So in terms of like anytime we're introducing a new data set or describing the data in acres, we'll generally write a blog and put it on there to help our users understand where it comes from and how it's useful. So the first half of the report, which kind of covers the broad strokes, right, across all states, that's available there in blog format. And you can, fill out the form if you want the full PDF report, and that's going to have your state-by-state breakdown with trends by productivity index and so forth.
Mm-hmm. Yeah, I encourage anyone to go check that out. But before, I guess let's dive into it. So,
Sure.
What were some interesting key insights that I guess was there anything that challenged your preconceived assumptions of land transactions during the time period of this report? So going into this, did you have any assumptions that either were confirmed or debunked as you work through this?
That's a great question. There's probably 2 things that come straight to the top of my mind there. One is just how seasonal ag land sales are. I mean, you can it's every year there's just really strong cycle where Q2 and Q3 generally is a little bit of a wave, or sometimes not exactly Q2, Q3, but Q2 and Q3 tend to be way lower sales. Just the number of sales go way down, and then of course Q1, Q4, you get this surge of sales. So yeah, we all know that. I think by gut, like we know that farmers are not generally trying to sell their farm while they're producing on it. But as a data scientist and somebody that looks at ag data all the time, it was just like, wow, like it's really very strong signal here. So a pretty drastic, drop in sales in that summer production season. The second thing, so the seasonality, but what I'll say, the caveat there that I think is interesting is, despite that sort of annual regional dip you see in the number of sales, maybe price per acre within that time frame, because you can imagine when you have less sales in the production season, it's probably because the sales that do occur in that season are kind of forced, right? They're probably selling at a lower price per acre specifically because they just have to get it out.
Hmm.
And so you can pick that up in the data. That was pretty interesting find.
So it
Along
looked like sales were a little bit softer during Q2 and Q3 across this 3-year
That's
period.
right.
Okay.
Exactly. A little bit. So there's less sales, but also the price per acre of those sales dropped a bit, and that's year over year. That's not like it's not like it dips dramatically. It's just something that we pick up every year, and it tends to still. What I love is that what we all know is that farmland is increasing in value. You see that in this report. You can look at NCREIF. Don't ask me to say exactly what that stands for again, but the NCREIF produces a 30-year report on land value trends, and it's from like 1990 to 2019, I believe. And so they've got a really strong growth or appreciation curve. So what we find matches that pretty strongly. Like, we know that yes, there's this annual seasonality. You get more sales at a higher PPA in Q1 and Q4 and Q1 each cycle, but we still see everything kind of trending up. But that leads to my second point, which is the other assumption, the thing that everybody knows, and you've seen the crazy sales, particularly out of Northwest Iowa and even some in Missouri and Illinois, especially in 2022. Just the sheer volume of sales in 2022 was pretty incredible to pick up. So you get the seasonality over time within years, but in 22, we just saw a huge volume in the market, a lot of really high price sales and a high number of sales. I think something in our report is probably really conservative, but we picked up over $30 billion of land transactions.
That's crazy.
And it's really like I filtered out a lot of data. So it's truly, I limited it to what I knew was like tillable farmland and nothing else.
Hmm.
And so that's an awful lot of cash being spent on farmland in a year. And of course, we've seen this year kind of meter out and whatnot. But that was, it's always shocking when you see a huge spike in data like that.
Do you have any guesses what caused that? I mean, and I know that's kind of outside the scope of the report, but obviously you're closely tied to a lot of this. So I don't know if you had any deductions of what may have caused that.
Gosh, that's a really great question. I wish I knew.
Yeah, you're right.
And I wish I'd known ahead of time, right?
Yeah.
But no, I mean, I would, if I were to guess, just kind of gut assumptions, coming out of COVID, people exploring markets again. There's been quite a lot of attention paid on farmland in recent years. And so I think just like we see this year, I think the big boom is probably due to interest rates and very strong farm balance sheets. And again, as an economist, I'm fine to armchair a little bit, but I also want to be careful, like pinning the cause on one thing. But I would argue or guess that farm balance sheets being really, really strong in 22, partially as a result of very low interest rates, was a strong driver of that. And people know in general that farmland is a really great hedge against inflation. There's
Absolutely.
good correlation there. So I think a lot of investment firms really started purchasing more farmland to hedge against inflation. And so there's a number of contributors. I'm sure I'm missing things. People can call me out on later, but that's kind of my take for now is interest rates. That's also why I think we've seen it meter out this year. Interest rates are rising again. The cost of cash is going up. And so and we've seen inflation kind of decrease a bit. So there's a little bit less attention being paid to that big surge.
Yeah, I think that's fair. And one of the high bullet points of this too. So farmland, when this report started, Q1 2020 was $7,500 an acre, and then in 2023 Q2 it went up to $9,500 an acre across the Corn Belt, or those 8 states.
Right.
Which, do you know what the annualized return of that is? I should have ran it for you. I should have ran it for you.
Yeah, you can run it for me. I should know off the top of my head, but it's over 10%. And yeah, that's and again, I'm filtering out I'm sure so like the one key factor there, I think that's a really good point. So one, I think when you're talking about pure tillable farmland, I think that's probably about as accurate of an estimate as you can get based on real transaction data. One key factor though is that it's possible we filtered out some farmland, for example, that had like a farmhouse on it or something like that. So maybe smaller properties, smaller farms, maybe the price per acre was even lower, but maybe it had a house on it. So there's some complicating factors that would my guess would meter some of those numbers just a little bit.
Okay, got it. And when you were looking at some of this data, let's say there was a great tillable piece with a windmill on it. How did that factor into the cost per acre, or was that one thrown out?
So I wouldn't know if
Okay,
there was a windmill on it or not, right? It's typically not going to be recorded as at the assessor's office or
sure.
anything like that. So in general, we wouldn't have picked something like that up. Yeah, it's a good question though. So what I would say is with there are always caveats, right? There are so many, and that's what makes a report like this really hard to write. It's why, for example, I focus on crop reporting districts across a few counties, right? So what I'm trying to get at is not, okay, did this farm in this place, change value by X amount? I'm trying to get that general trend of appreciation. What
Mhm.
do we generally expect for good farmland or good tillable ground in a region? And then if I can understand that better with productivity indices, and that's what I'm going to look at too. But there are a lot of things that in this initial report we didn't pick up that we hope to pick up in the future. A good example of that would be like irrigation and water districts, right? So in Nebraska, for example, we include in the report. But I'd love to do a deep dive, even on a state by state level, where we actually break that out by natural resource district. How much does that drive farmland values from one to the next?
Yeah, yeah. There's a lot of avenues to go down
A lot
this,
of
and
nuance. Yeah.
yeah,
So the
which
goal
is
here was like, what's the big picture? Because until you get that,
you can't. Yeah, it doesn't
there
matter.
are 1,000 rabbits to chase. I mean, it took me about a month just to kind of wrestle with the data and get it where I felt like, okay, I've really nailed down the trends here, and I feel confident that we've handled that well for tillable acreage.
Yeah, absolutely. And one of my favorite, well, there's a lot of really great charts on this. And what I like about them is it shows all the different states that were a part of this report. And so there's the price per tillable acre trends in for the states. And then my favorite one is the price per productivity index trends from 2020 to 2023. And this explained that because I think if anyone could go look at any chart and just feel like they get somewhat of a grasp when they're looking at farms, just as a business gets a multiple or anything else, like this is
Sure.
kind of the multiple of tillable acres.
That's
and
right.
and and so
It's a benchmark.
explain what that is for people who maybe don't know. And my favorite chart of the report.
Yeah, sure thing. So the NRCS, the Natural Resource Conservation Service, puts out their web soil survey. Most folks have been on there. If you farm at some point, you've probably been curious and tried to bang your way around in their website to find soils data for your farm. So we've pulled their data into acres and made it a lot easier to work with. One component of that soils data is called a productivity index. And there are actually different kinds of productivity indices. And that's a really important thing when you're considering this. So there are four that are, there are actually more than four state-based. In the report, I use four state-based indices, and then I also use the National Commodity Crop Productivity Index. That's a mouthful to say. We'll just kind of sideline that one for a second. So the idea behind a PI or a productivity index is that you get an inherent measure of the productivity of that soil, right? And so when I say inherent productivity, I'm saying, okay, all things constant management wise and all things constant climate wise, there's no major crazy shocks. It's kind of an average climate year. It's an average management year. I should expect, you know, uh, in Illinois, where you're at with Illinois PI, that's kind of an expectation of bushels per acre. That's kind of how it was built initially. It's not really
Little
interpretable
antiquated
that
now.
way
Yeah.
now,
Yeah.
but initially that was what it was. What it really is a relative index. So you're not actually getting an estimate of the bushels per acre of corn anymore. But what you're getting is, hey, if I've got an Illinois PI of 21 on this farm and the farm next door is 135 and they're the same price, I'm going to buy the one with 135, right? It's just relatively better productivity. So uh, in Illinois, you've got the Illinois PI. In Iowa, you have the corn suitability rating 2. And that one's actually a true index, which is 0 to 100. And then in Minnesota, we have the Crop Productivity Index, or CPI. And then in Indiana, we have WAPI, or Weighted Average Productivity Index. The other states, a couple of them have other CPI type ratings, but in general, the NCCPI, the national index, is used if one's used at all. And that's why I didn't produce it for all the states, because honestly, like Minnesota, Iowa, Illinois, and Indiana, you're going to get much more consistent ratings of soils with those indices than you will with NCCPI. But so that's what it is. It's a metric of productivity per tillable acre. And so you can actually take the price per acre, break that down to price per tillable acre, and then get the PI and get a price you're paying per unit of productivity. Mm-hmm. So it's going to look something like hundreds of dollars per PI. And it gives you that direct metric that you're interested in if you're purchasing a farm. Mm-hmm. So that's how it's calculated. Sorry, it's a bit of a mouthful to explain, but hopefully that made some sense.
Absolutely, yeah. Yeah, no, I think that's a really important thing for people to understand if they don't already. And when you were running that, is there any key findings you noticed after you put that together?
Yeah, so we have a farm team here, and what we do, and I think you're familiar in Illinois. Like what most brokers will do with farmland is they'll classify using that index. So like, and I can't remember the thresholds off the top of my head, but you can read them in the report. Like for Illinois PI, above a certain level is Class A. And then the next level down, it's like 130 to 140 is Class B, and one and so forth. So we end up with Class A, B, C, D soils. In the report, I report on Class A, B, C. And so what that shows us was really, really interesting, in my opinion. So what we see is that Class A ground. So it also gives us a way to compare price per PI across states. So we've got Class A in Illinois and Indiana and Iowa and Minnesota. And so now you can kind of compare these, not directly, but it gives you a sense of where the trends are. And what we see in general is that Class A ground was the fastest to increase in value, saw the greatest surge. But Class A ground was also the first to sort of soften this year as interest rates came up. And so as we just don't see quite as many sales this year. We're still seeing some record sales, like in price per acre. I mean, there's still some very strong farmland markets out there, so don't get me wrong. But across the board, the trend is that it is a softer market here in 2023. And Class A ground has taken kind of the largest dip relative to the other classes. Class B, we do see a little bit of plateauing, but the price per acre and price per tillable acre for PI, for Class B productivity index, has been much stronger, in fact, in Class A ground. And I think that's a very unique finding. I'm not sure that any of us would have predicted that to happen. But I think that's a really unique finding that's really visible in those charts that you're talking about.
Mm-hmm. Yeah. Do you have any guess why that is? Because you would almost think that Class A would be the gold standard, and it kind of sounds, it's first to go up, first to go down. But you would think that Class B would follow that closely. Just speaking out loud.
Yeah, and I mean, if you were to actually look at the correlation, it's still going to be really strong, right? The trends are all going up until this year, and we see a little bit of a dip. And so, but yeah, I mean, it's a good question. My guess, though, is I think if you look at Northwest Iowa, that's where we've seen like the wildest sales hitting, 30,000 an acre in some cases, over 25K an acre. More than a few times, Mm-hmm. So I think probably those are the places where, I don't know, maybe there's just more institutions jumping in and buying there, or maybe there's more, there are farmers nearby. It's a good question. I'm not entirely sure how to answer it.
Mm-hmm. I'm asking you the hard questions here. I apologize. Yeah. I'm asking stuff outside the report.
Yeah. I mean, I think there's probably a bit of like, maybe it's a bit of a behavioral thing. Like, oh, I bought a Class A, PI in Illinois, and or I'm in Northwest Iowa, and I've got Class A ground. I've got a CSR2 of 96. Mm-hmm. A bit kind of a bragging right.
Sure.
course, yeah. I mean, I certainly think it creates interesting opportunities for folks getting into farming or farmland investing or farmland brokering, because what that basically tells me is, hey, maybe Class B is the way to go. Like, if the unit economics may make a lot more sense to
Absolutely.
get started at that Class B level, prove out a good farm. And maybe Class A, those high level, are for people that have already figured it all out. Maybe they've farmed 30,000 acres and this is
Yeah.
right next door, so it means a lot for them to farm that property.
Yeah, I have to imagine that happens a lot, especially in those regions you're talking about, because
I
in
would think
reality, a
so.
lot of those farms go up for sale one time, and usually their balance sheet is really strong, and they can just go buy it.
Exactly. That's right.
Yeah, but nonetheless, that I found that chart really fascinating. I think it's such a great starting point for someone just to get a ballpark of, hey, is this even priced remotely to where
Right.
comps showed they should be?
Yeah, and I think that's the goal, really, is to like give everyone a fair picture of what the benchmarks look like, right? Okay, where are we at right now? I'm looking at a few farms, looking at price per acre. I'm looking at my PI on this farm, calculating price per PI based on comparable sales in the region. Am I landing at a price per PI that makes sense, or a price per tillable that makes sense? And I'm not drastically above that benchmark without some additional factors, right? There are things that are not in our data set. Things like tiling and drainage or irrigation, those things are going to be averaged out in this study. It's not that they're not captured, like those sales are captured,
Hmm.
but those improvements are not captured. So you may find a really well tiled, really well irrigated, beautiful piece of land that's well above that benchmark that makes sense because
Absolutely.
of those improvements.
Yeah.
So it is very important, again, to what this is not meant to do is to replace that local knowledge and to replace the broker and the appraiser that are on the ground. We're here to kind of empower them in their decision making. Where should this benchmark and where should it land based on that expert analysis on the ground?
Hmm. Yeah, that's a great point to really break out that there's a lot of nuances to each particular piece of ground. But if you're new to this, or you're just trying to
Yeah,
learn and just get an
right.
idea, I mean, this is
That's right.
definitely the place to start. So let's talk a little bit about Illinois. I know you guys broke out different states, and so from what I'm reading here, when you started this study, the Class A started at $10,000 an acre in Q1 2020. Q2 2023, it reached $14,000 per acre. So another strong run of price. And
Mhm.
what I really like too is which we just kind of talked about, like Class A, Class B, and Class C, and it shows the price per tillable acre per region too. And then the number on there, that's the number of sales for those
That's right,
areas or
in
regions.
that reporting district, yeah. So, because that's a really important thing, like, some of those are gonna have less sales, right? And so you can imagine if there are less sales, maybe it's got a big leap in price per tillable or something, but you kinda take that with a grain of salt if you've got 6 sales in that region, because 'cause you're just gonna get more variability. But if you have a whole lot of sales, because many of those crop reporting districts, we've got, well into the double digits, 50, 60, in some case, maybe even 100. And so it gives you a pretty strong inkling that, okay, this is probably a pretty good average
Mhm.
for that CRD.
Was there any other key findings that you found with Illinois, or in relation to maybe what other states were doing?
Illinois, I think in general, it's always been a strong corn belt farming state, right? That's not surprising, but I think Illinois has not had the attention that Iowa's had, right? I mean, I feel like Iowa's in the news once a month for their farmland sales, and
I wonder if
yeah,
it's just because of search volume. Those
I guess
reporters on
so.
CNN or whatever, like
It's
they have to look at that, like, ooh, But
sure.
anyhow, yeah, for sure.
Yeah, so I think, because to me, like, what is surprising, maybe not surprising, like, we've kind of watched this at Acres over the past few years as we've built things out. We've noticed these strong trends in Illinois, but to put it on paper like this, and you actually see, oh wow, like it's very, very competitive in terms of pricing with Iowa. It's very good farm ground. Um, and so to see that show up in the data was kind of a good confirmation of what we felt like we're seeing
Mhm.
in Acres.
Yeah. So yeah, I definitely encourage anyone to go look at this report and look at each of these states. And maybe you live in Illinois, or maybe you live in Indiana or wherever, and you're curious what your neighbors are doing or how farmland's doing over there. You can
Yeah.
get a quick idea. Now with Indiana, just kind of going from state to state in this, was there any was it what's your opinion of Indiana with the data that you guys retrieved here?
So maybe be slightly controversial. India is a very strong production state as well. The only thing controversial in Indiana, in my opinion, is like the weighted average productivity index. I think brokers in Indiana are also split on that. So like we classify WAPI, Class ABC, um, but I don't know if I trust the WAPI index quite as much as I would something that's been developed like CSR2 or the Illinois PI. So you're going to see a little more variability in states like Indiana. And there just is more variability, I think, in Indiana. You've got a few more metropolitan areas to deal with that certainly influence values. And Ohio, for that matter, is probably very much the case. You'll see some areas where yes, we're only analyzing farmland, but if a farm is 10 miles from the nearest city versus 50, that makes a big difference in the value
Yeah.
of that farmland, and it's not inherently tied to productivity. And so that's where some of the other states that are included in the study, we present it all because our goal is just to present transparent pricing of farmland information. But you'll see in places like Ohio and Indiana, I think Northeast Indiana has a couple that were pretty high sales. They were farmland sales, but
Mhm.
it really drags up the pricing a bit, and you can see it pretty starkly on the map of the crop reporting districts. Similar in places like Wisconsin. Wisconsin is not as variable due to metropolitan areas, but southern Wisconsin is really good farmland, and so is northern Wisconsin, but for different farming. Right, you're moving into dairy land, and you're moving into pasture and some timber even, and so of course that's not going to price in the same way as corn soy farmland.
Sure. Yep. Absolutely. And it seemed, just looking at this really quickly, it seems like Indiana had less transactions, or quite a bit less transactions in comparison to Illinois, obviously, as I'm just going from
That's
one
right.
page to the other. Um, and then going to the golden child of the Corn Belt here, Iowa. Um, what did we kind of touched on this, but was there anything that really jumped out to you in terms of Iowa? Obviously, you can clearly see that Northwest Iowa was very active during this period. What else did you see?
Very active. I honestly, I think probably the values in Northeast and Southern Iowa might have been. I think probably because all we hear about is Northwest Iowa, you just kind of assume the whole state is at the same level. But it's really clear, like there's like a perfect gradient across Iowa, where you see it. The price per acre. Again, it's not that it's not strong, and it's not that it's not good farmland by any means, but you do see, price per tillable acre substantially lower in that Northeast Iowa section and Southern Iowa section.
Hmm. Yeah, and it's I just love these charts too, because I just love where you can see the volume of transactions, and it's interesting as a land broker. There's parts of the state where typically there could be farms that hardly ever go for sale publicly in a region, but there's still
Hmm.
transactions going on. But a lot of times they're just arm's length deals,
Hmm.
and this still gives you an idea of some of that information. Because if you're just, as a consumer, you're going out there and trying to pull data on
It's
Zillow,
hard.
Realtor, or wherever else, I mean, it's going to be really challenging. But this report's going to give you an
Yeah,
excellent
and
starting point.
the filtering, I think, how we came to use the sales that we did was really important. We put a minimum of 2,000 per acre. I think we did a minimum of 3,000 per tillable acre. Uh, Again, for those arm's length sales, you get a within family kind of situation, and it can really skew the results if you're not careful. And so we tried to filter those out. And likewise, there are places that have improvements that are probably good farmland, but if you're selling, a couple of sections along with a house, the price per acre might be, greatly skewed in the upward direction. So we put cutoffs at 30,000 an acre to
Mhm.
make sure that we really focus on tillable farmland.
Looking at Minnesota, it seems that the Class A had seen a pretty steep decline in comparison to some of the other states.
That is another one that I was surprised by, the Class A declining, and some of that may be that there's just not quite as many sales of Class A this year to date. Maybe we'll see more as the year goes on. But yeah, it's probably the starkest decline in Class A ground in Minnesota, and Class B ground though still pretty strong.
Yeah.
And I think something that's also important to note, Minnesota is a bit of a weird one relative to the other states, primarily because the geography is different. So if you go to northern Minnesota, you might have a really high CPI, right? Especially northwest Iowa. There's some good farm ground up there, but your growing degree days are a lot shorter, right? So your CPI can be really good, but your growing degree days are short. So you're going to have to. So there's just a bit more risk in production. Therefore, the price per acre is going to be lower naturally. And so I've wondered if, I don't know, it's hard to say without digging deeper. Like I said, like you could go down a lot of rabbit holes here, but
Oh yeah.
that would be a really fun one to chase because Minnesota has Northwest, you've got growing degree issues, maybe not issues, but just risk, right? Good farm ground, could be Class A, but you're going to take a reduction in price per acre specifically because your growing season is a little bit risky. You go to somewhere like the Red River Valley, it's very strong. Good pricing. I would say good pricing relative to southern Minnesota and some places that are effectively the same as Class A ground in Iowa. And so it's hard to tell in a place like Minnesota. We give that over the state picture and the trends, and we try to break it out in those crop reporting districts. And you can see it very clearly in the map of Minnesota, like high values in those southern CRDs, a little bit lower in the middle, and then it drops off pretty heavily towards the northwest. But I think in general, if you were to narrow that down, you look at those Class A trends, somewhere like central Minnesota or Red River Valley, you're probably still going to see pretty strong trends relative to some other regions.
Yeah, that's interesting. And jumping to Missouri, there's the Lone Desperado, one sale that hit $15,000 an acre,
Yeah.
Class A tillable in Missouri, and obviously is northern Missouri, and right across the boundary is Iowa. But what do you guys find with Missouri? It looks like quite a bit
So
less volume in some of
that's
these
true.
sales.
There's less volume of sales in Missouri. So something that's important to note in Missouri is that there are almost no reports of Missouri land value trends. And
Interesting.
the reason for that is Missouri is a non-disclosure state. So your assessor data is effectively voluntary. So there's just very little assessor data. So most of the data that we use in our report, there is some assessor data in there, whatever is available. We're not going to cut it out because it can still be valuable, but most of that is going to be from our curated sales database or brokers and appraisers have added their sales data. So there are less sales because of that, but it's still probably the most accurate representation of
Sure.
land values in Missouri that's available just because the data just doesn't exist anywhere else. And so there's more variability because there are fewer sales, but also like Minnesota, Missouri has really variable farmland. And you don't have a crop productivity index that's specific to the state. So you only have NCCPI, which is not greatly valuable in Missouri. Beyond that, you also have another wild card as you move into like Saline County and central Missouri, you get more seed ground, right? So seed producing ground is going to sell differently than grain producing ground. And so you have these other factors that, again, that's why I encourage folks to get into Acres and check it out because you can go look at the sales and you can get a bit more information to see those regional changes and differences. And our goal here was just to paint a picture of what is, and not really trying to forecast, not trying to be too predictive because we know that gets us all in trouble. Start predicting land, economic land values, but
You should. No, I'm just kidding.
yeah. But I think painting a transparent picture of what land values are, and we're certainly, I'm always open to, especially as the person writing the report, I'm open. I would love feedback. What do you guys want to see? What would be more valuable to show next time? Because we're going to do this again. I'd hope to do this quarterly or so, something like that. And if I have brokers like yourself giving me feedback, what you'd like to see, I'd love to see what we can work into our analysis for future reports.
Yeah, I think that's excellent. I think for where it's at, there's this limited information on what you can get as someone that wants to learn more about this, and as this hitting the bulk of the marquee states, it's such. I just hope people don't take it for granted because I think it really is an excellent piece of information. I guess kind of breezing through some of these other last states here real quick with Nebraska. that would be one of those states where there's irrigated and non-irrigated ground where it could be really challenging and could be a separate report to your point.
That's right. Yeah, Nebraska is a tough one, and again, we use those CRDs, and I almost went down the rabbit hole to look at it across the natural resource districts. Instead, I decided that our goal this time was really to paint that broad picture. What is land going for? And I think I'll save the by NRD values for a different report, maybe a state level report. Also looking at irrigated ground, irrigated versus non-irrigated is very important in Nebraska. And so it would have been a bit too much to bite off to, reports already fairly comprehensive across the 8 states we're in. And so I didn't want to get too much beyond the 20 pages of figures and trends and discussion there. But I think there's a lot of room for us to expand there, to talk more about water. And just a bit of a, maybe not a sneak peek so much, but a primer that our next report's actually going to be in California. We're going to probably put out a report focused primarily on water and land values in California next. So I think once we get past that, we may start to revisit some of these states individually and break them out in a way that makes sense. Where water's an issue, that's not, a lot of the Corn Belt is non-irrigated, it's dry land, so you don't really have that issue in the same way that you do in Nebraska.
Mm-hmm. Yeah. Nebraska's an interesting state as you drive through it. I've drove through it once, and it's completely different as you get throughout that state.
Yes.
So, which I'm sure anyone listening to this, whether they've flown over states, and you can just see how much land really does change from one part of the state to the other. So, so
the
going
number
into,
of pivots, you
you
go
look
from
at
Iowa,
satellite
Missouri,
imagery.
and you just start to see pivots everywhere.
Yeah.
Yeah.
So, and then just wrapping up here with Ohio and Wisconsin as these last states here. Obviously, you mentioned Ohio. To your point, there's a lot of major metropolitan areas which can impact the farmland values, and then really the southeast part of Ohio is predominantly timber. And
Right.
was there any high level things that you guys found with Ohio and Wisconsin, kind of lumping the two together?
I think the goal there was really exactly what you said. The goal is just to highlight, hey, what do the trends look like in the primary or predominant ag regions? And I think we display that pretty well by state. We're focused on that tillable price per tillable trend, and we have the maps and growth. From my perspective, I think that's the highest value pull from the report for both Wisconsin and Ohio. They're just, they're not. They're going to be much more variable than somewhere. Honestly, it's kind of the way I could have treated both Wisconsin and Iowa like I did Missouri. Like I didn't even include southern Missouri or southwest Missouri or the Delta in Missouri because they function very differently. They're primarily timber. It's primarily timberland. Or the Delta in southeast, the boot heel of Missouri, ground sells very differently. At some point, we'll do a Delta report, I'm sure, because that's we're here in Arkansas,
Yep.
so that's close to home for us. But I think I could have done that probably in Ohio and Wisconsin, but particularly Wisconsin made a lot of sense. You could kind of see that pattern. I think you see the influence in Ohio of those metropolitan areas, particularly I think it's Northeast Ohio, where you can see there's some farmland sales up there, but they're definitely within this realm of influence of higher populated areas.
Absolutely. So with, do you have any, and I know you hate these questions because do you have any bold predictions for the next 2 or 3 years now, looking at the last 3 years with so much intensity?
Yeah, I mean, I can give high level gut stuff. Like what I feel pretty strongly in is based on our data and the other data you see out there. Farmland will continue to appreciate. I think the market fundamentals. You can't ever time the market. So what I don't like is when you're like, okay, in 2 years, where are we going to be?
Yeah,
That's when I'm
going
to bow out.
3.
But yeah, like I think over time, what you're going to see is that long-term trend continues to improve. And there's some really good economic, fundamental economic reasons for that. One, we all know that farmland, you can't make it, right? Like there's a limited amount of farmland. The supply is very limited. In fact, it's decreasing because of some of these metropolitan areas. Likewise, on the demand side, we have more people that need to eat. They need food, feed, and fiber has to increase. And so just the fundamental economics are that demand is going up, supply is at best staying where it's at or decreasing. So you're going to see farm balance sheet stuff, interest rates. Those are definitely affecting farmers. They're definitely affecting investors in the short term. But I think over time, we're going to continue to see that steady. We like to call it kind of the boring trajectory, right?
Yeah.
It's a steady but continuous increase in appreciation in farmland values. So I would expect that to continue. The conservative, like national appreciation number that I've heard is at 6%. Is like very conservative. We're going to continue to see that in the long-term trends, if not more. But that's as bold as I'll be.
That's fair. I mean, I think that's fair. It's always fun to ask because there's not too many people that look at land data as much as you.
Right.
so
Yeah,
so we
that's
want to
fair.
try to shake you a little bit and see if we get
Sure. Sure.
anything there. But no, I think that's really fair, and I think that data shows that to some degree. And also, do you think looking back at this report and let's say 10 or 20 years, are we going to look back at this 3-year period and think, wow, there was some significant things going on during this time period? Because to frame that, I want to say it was probably 2022. I had a mortgage lender on here, and I said, "Are we in the golden age of interest rates?" He's like, "Absolutely," and that
Yeah.
turns out to be true. And
That's
so, not maybe to that degree or extreme, but is there anything that as you look 20 years in the future and then pull this report out of your desk, you're like, "Wow, that was a pretty significant time because of X, Y, Z."
Absolutely. Yeah. I mean, I think that's exactly the point that I would make too. I mean, interest rates have risen faster this year than at any time in history. And if you look back at federal funds rates for the past 30 years, there are a couple times, you had the dot-com bubble at the turn of 2000, and then you have the financial, the housing crisis in '08. We saw, interest rates rise very rapidly in both of those events. But this was even faster than those in how fast the rates went up. So, and not only that, they were incredibly low last year to the point where it really bolstered a lot of purchasing. I mean, when money's kind of effectively like free,
Yeah.
people are going to buy more. And so I certainly think that we will look on this as a volatile time this past 2 or 3 years. Plus, we're coming off of COVID, right? So there are a lot of things these past few years that have probably set the market up to be a bit more volatile. And so, yeah, volatile period. But I think, again, it's more like if the trend's like this, and typically you're going to see maybe a little volatility. Maybe this time it's like a bit more jagged, but it's still going up.
Yeah.
And I think that's how I would explain it.
Okay, that's a great explanation, and I couldn't agree more with that. And it's it'll be fun just to look back because it is so fun, and I get in trouble because I look at all these different charts of exactly what you're talking about, and then I think people tend to get overexcited about certain headlines or certain things, and then you just zoom out and be like, okay, that giant issue, quote unquote, was this a little blip right here on this chart, 20 years ago, and whether it was good or bad. So, and to your point, this farmland being extremely stable and boring, but boring can be excellent for a lot of different people.
That's right.
So anything else you can think of here, Aaron? I really appreciate your time, and I strongly encourage everyone to go check out this full report and read it. And if people want to send you ideas, where should they send those?
Yeah, you can, if you just email us at support@acres.com, that's great. And honestly, like particularly for the report, I'm happy to give my email for folks to respond directly to. It's Aaron, AARON, .shew, SHEW, @acres.com. I'd be happy to answer questions or take feedback. So, really glad to be on the show. Really enjoyed talking through the report with you. Excited for it to be out there in the wild, and look forward to continue to improve it and what we include in it in the future. So, thanks again for having us today, and look forward to carrying forward.
Absolutely. And as you guys release more reports, we'll just have to get you on here and we can do a deep dive.
Yeah, sounds great.
Awesome.
Look
Thank you,
forward to
Aaron.
it.